Have you ever contemplated the silent architect behind the digital numbers in your bank account, or the fluctuating interest rates that dictate your lifestyle? While we focus on daily market shifts, we are actually operating within a legacy of financial engineering established over 2 centuries ago, a structure so pervasive it has become the oxygen of modern existence. To understand this, we must travel back to 1769, to a cramped, money-changing stall on Frankfurt's Jew Street. Here, a modest coin dealer laid the groundwork for a dynasty that would eventually orchestrate the pulse of global history. By 1815, his 5 sons had strategically embedded themselves into the financial veins of England, France, Austria, Naples, and Prussia, coordinating policy across borders with unprecedented precision. By 1850, this single family commanded a treasury far exceeding the collective wealth of every European royal house combined. Their name was Rothschild. Yet, the true genius of the Rothschilds wasn't merely in the gold they accumulated, but in the operating system they installed. The central banking frameworks, the strategic financing of national conflicts, and the mechanisms of sovereign debt did not vanish when the gold standard fell. Instead, they metamorphosed. They expanded. In 2026, they influence every facet of your economic reality through a network that remains largely invisible to public scrutiny. The mortgage you struggle to pay, the national debt serviced by your labor, and the central banks manipulating your currency's purchasing power all function according to the Rothschild playbook. They perfected the art of multi-generational wealth preservation through invisible trusts and monopolies on money creation. The Rothschilds didn't just build a private empire. They designed the very anatomy of international finance that governs the flow of capital from your hands to the global elite. Today's Federal Reserve, the European Central Bank, and global institutions like the IMF and World Bank are the modern iterations of their 19th century prototype. You cannot simply opt out because the system isn't a specific building or a family name. It is the method itself: interest-bearing currency and perpetual sovereign debt. Every single dollar or euro you earn is merely a unit within this vast compounding machine of wealth extraction. This blueprint has been replicated by every government bond market for 250 years. This journey is about decoding how a Frankfurt coin shop became the master of nations. Recognizing this structure isn't an academic exercise. It is an essential strategy for survival in an age where debt is the primary tool of control. Understand this. To truly grasp why the global economy feels rigged today, we must deconstruct the engine of extraction built by Mayer Amschel Rothschild. Born in 1744 within the suffocating walls of the Frankfurt ghetto, Mayer was a product of a world that denied him land, titles, or traditional occupations. However, it was this very exclusion that forced him into the most powerful niche imaginable: the mastery of liquid capital. By the age of 13, following his father's death, Mayer wasn't just trading physical coins. He was deciphering the fundamental law of human governance. He who controls the issuance and supply of money dictates the fate of nations. Land can be seized and armies can be defeated, but the entity that governs the creation of credit holds the ultimate leash on every king, every government, and every citizen. Mayer's ascent accelerated in 1769 when he became the trusted court agent for Prince William of Hesse, one of Europe's wealthiest royals who built a fortune by leasing mercenary soldiers to foreign kingdoms. Managing these complex, high-stakes international payments provided Mayer with the ultimate laboratory to test his theories of credit, commission, and sovereign debt. Yet, his most revolutionary innovation wasn't a financial instrument. It was his lineage. By strategically deploying his 5 sons, Amschel, Salomon, Nathan, Karl, and James, to the 5 beating hearts of European commerce: Frankfurt, Vienna, London, Naples, and Paris, he created the world's first decentralized intelligence and banking network. While the world saw 5 independent bankers, the brothers operated as a single coordinated organism. This was the Rothschild paradox. distributed power with absolute centralized control. Each son functioned as a local banker, embedding himself into the trust of his nation's elite. Yet behind the scenes, all five brothers shared high-speed intelligence and moved capital across borders faster than any courier of the era. They created the first international financial web, enabling them to do something no one had dared before: finance both sides of major wars simultaneously. During the Napoleonic Wars, they realized a profound truth that still governs 2026. The outcome of a battle is secondary to the status of the creditor. Wars inevitably end, but the debt incurred to fight them is eternal. By acting as the indispensable lender to both France and Britain, they ensured that no matter who won on the battlefield, the Rothschild ledger would always grow. This coordinated strategy transformed them from mere money changers into the invisible overseers of the European continent. They demonstrated that while physical borders are rigid for people, they are entirely porous for capital, provided you control the gates through which that sovereign credit must eventually flow. The Napoleonic Wars from 1803 to 1815 represented the ultimate crucible for the Rothschild brothers. While nations bled for territory, the family focused on the logistics of profit. Every government, France, Britain, Austria, and Russia, required massive capital to sustain their military machines. The Rothschilds provided it to everyone. When Britain struggled to pay its armies in Europe, shipping physical gold was a suicide mission. Nathan Rothschild introduced a psychological revolution: ledger-based credit. He issued credit in London, while his brothers paid the troops in local currencies from their respective branches. The gold remained stationary, only the information moved. This innovation made the Rothschilds the central nervous system of the coalition forces. They weren't just lenders. They were the very fabric of logistics, turning them into a vital, private branch of the government's military infrastructure. Their most calculated strike occurred on June 18, 1815, at the Battle of Waterloo. This conflict between Napoleon and Wellington was the ultimate gambling arena for bond markets. Nathan Rothschild possessed a private intelligence apparatus, including elite couriers and carrier pigeons, that outperformed official government channels. He received news of Wellington's victory a day before the British authorities. Instead of buying bonds immediately, Nathan began dumping them aggressively. Seeing the most powerful banker selling, other traders panicked, assuming Britain had lost. As the market plummeted into a freefall, Nathan waited for the moment of maximum despair. When prices hit the absolute floor, he covertly bought back the entire market at rock-bottom prices. By the time official news arrived, British bonds skyrocketed. Nathan didn't just win. He executed a 20-fold profit in a single day, effectively capturing the British economy. This trade transformed the Rothschilds into the ultimate kingmakers. By 1815, they were the primary creditors to Britain, France, and Prussia. When a government owes you its future, it loses the ability to oppose you. They didn't conquer Europe with bayonets. They conquered it with debt. This event solidified a core tenet of modern finance. Wealth is about controlling information and the perception of value. The debt generated was so massive it could never be fully settled, ensuring subsequent generations of taxpayers would contribute to the family's compounding wealth. They became the quiet architects, ensuring government wheels only turned with their financial lubrication. This established the sovereign debt as a tool of permanent control, where the creditor remains untouchable while nations remain in a perpetual cycle of refinancing. The Rothschilds proved that whoever holds the debt holds the true sovereignty, regardless of who leads the parliament. This paradigm shift replaced the old world power of physical conquest with the new world power of financial dependency. The Rothschilds understood that while territory can be recaptured through war, debt creates a mental and structural prison that persists through peace. By controlling the primary credit lines of the most powerful empires on Earth, they essentially dictated the geopolitical climate of the 19th century. They weren't just observing history. They were financing its direction. They created the eternal creditor. Beyond the mechanics of simple lending, the Rothschilds grasped a deeper, more profound truth. Real power resides not in possessing money that already exists, but in the absolute monopoly over its creation and subsequent circulation. This realization shifted their focus from being mere creditors to becoming the architects of the very institutions that define national value. The blueprint they perfected was the central banking model, a concept pioneered by the Bank of England in 1694 during a time of immense sovereign upheaval. This institution was a private entity disguised as a public servant, possessing a government charter to print the national currency. The mechanism was revolutionary yet deceptive. The state borrows capital from the bank. The bank creates that money from thin air, and the state agrees to repay it with interest. Because the central bank only creates the principal and never the interest required for repayment, the debt is mathematically impossible to fully satisfy. This ensures that the government is locked into an eternal cycle of borrowing just to pay the interest on previous loans. While the Rothschilds did not invent this, they became its global masters. Nathan Rothschild secured a dominant stake in the Bank of England, while his brothers replicated the model within the Bank of France, the Austrian National Bank, and various Italian financial structures. They replaced the need for territorial conquest with the subtle, administrative control of the printing press. This isn't just history. It is the active operating system of 2026. Consider the Federal Reserve, established in 1913 through clandestine political maneuvers. It remains a private consortium of member banks, many with ancestral ties to these very Rothschild networks. When the U.S. government spends, it issues bonds. The Fed purchases these treasury bonds by simply typing digital digits into a ledger, creating dollars out of nothing, and charging interest on the transaction. As a result, the U.S. national debt has exploded to $39 trillion. This isn't a failure of the system. It is the system working exactly as designed. Annual interest payments now exceed $1.2 trillion, draining more capital than the entire national defense budget. This money doesn't fund schools or infrastructure. It is a direct transfer of wealth from your paycheck to the ledger of private bondholders. This Rothschild-derived architecture has been cloned in every developed nation on Earth. The European Central Bank, the Bank of Japan, and the Bank of England all function as quasi-private monopolies that lend to their respective governments at interest. This creates a permanent state of debt slavery for entire populations. You work, you earn, you pay taxes, and a significant portion of your life's energy is siphoned off to service interest on money that never existed until it was lent. The system is a masterclass in wealth concentration, ensuring that as nations grow, the banking elite grows exponentially faster. In this 250-year-old game, the currency is the bait, the interest is the hook, and the national debt is the line that keeps every citizen tethered to the financial elite's invisible control. You cannot escape a financial prison you cannot physically see, yet you feel its crushing weight with every rising price and stagnant wage. The true brilliance of the Rothschild legacy is not its scale, but its endurance. Most dynasties collapse within 3 generations through dilution and incompetence. To bypass this, they pioneered a rigid family constitution. By enforcing internal marriage and establishing ironclad trusts, they prevented wealth from leaking to outsiders. Mayer's 1812 testament was a masterpiece of legal insulation. It restricted management to male heirs, banned public disclosure of assets, and treated the family as a singular, borderless financial entity. This invisibility shield allowed their capital to compound in the shadows, immune to the taxation and regulation that dismantled other fortunes. They vertically integrated the world, owning the banks that funded the railroads that moved the commodities they also controlled. In the 20th century, the strategy evolved into ultimate concealment. The family withdrew from the headlines, allowing public-facing titans like Morgan or Rockefeller to attract the spotlight's heat. Today, the Rothschild name is rarely found on lists of billionaires, not because they are less wealthy, but because their assets are diffused across thousands of trusts and offshore entities, making their true net worth, estimated between $400 billion and $2 trillion, unknowable by design. The system they built has become autonomous. Entities like BlackRock and Vanguard are the 21st century realization of the Rothschild method. They don't need to own every company. They simply need to be the indispensable advisors and creditors at the top of the food chain. Larry Fink operates on the same frequency Nathan Rothschild did in 1815. We must move past the distractions of conspiracy theories. The Rothschilds didn't need mystical rituals or secret societies. They simply understood the cold, hard mathematics of compound interest and information asymmetry. They recognized that war is the ultimate debt generator for nations, and sovereign debt is the ultimate control mechanism for banks. This cycle is now the global standard. Since the Napoleonic era, every major conflict has expanded the world's debt ledger, transferring more power from taxpayers to creditors. Today, the method is self-sustaining. The architecture outlived its creators. So, how do you exist in a system designed for your extraction? You have three paths. 1. You can accept it as the inevitable cost of global stability and utilize its instruments to secure your own basic liquidity. 2. You can actively resist by supporting structural monetary reform and opting into decentralized stores of value like physical gold or Bitcoin, minimizing your exposure to central bank devaluation. Or 3. You can understand the patterns and position yourself as an owner rather than a borrower. If the entire global engine is built to funnel wealth from debtors to creditors, the only logical survival strategy is to become a creditor. Own the infrastructure, the banks, and the firms thriving on debt-based expansion. The Rothschilds proved that you don't need to rule a nation. You just need to own debt.